The recent changes in the tax laws creating some confusion for people who are getting ready to file, if you're trying to do it early, I suppose. Here's some things to clear up the confusion. We got our financial planner, Joe Burt, in with us this morning.
Joe,
always good to see you.
Good to be here.
The new tax law, it does take effect. I mean, it's in effect right now, but it will affect your filing for this year, or no?
Well, no. A lot of people think the new tax law, I'm going to get a break. What you're going to file in April really applies to the 2017 law.
Year.
Yeah, most of the stuff takes effect this year for filing next year.
Okay, well, let's break down some of the things that we really do need to know. You've got some bullet points for us.
Sure. First of all, your itemized deductions.
Okay.
Those are going. You get itemized deductions are going to increase. Actually, go away because most people are going to get a larger standard deduction.
Okay,
right?
Because we're also getting a few extra dollars in every one of our paychecks.
Yes, you're seeing that in your paycheck.
Okay,
right,
okay.
right. But the ability to take the deduction for your property taxes and charitable deductions, most people won't do that because they're going to get a $24,000 if you're filing jointly.
Yeah, why bother to itemize when you're already getting it in the standard deduction?
Exactly. The other thing is a change in tax brackets. We now have 6 tax brackets. Starts at 12%, going on up to 37%.
Okay.
And it'll take more for people to get in the higher brackets. And that's why you're getting a larger paycheck, because more people are paying less in taxes.
Okay. Do you think it's going to be a much more confusing process for people?
No. In fact, it'd probably be simpler, because if you don't have to itemize those deductions for charitable contributions, interest deductions, medical expenses, more people will just take the standard deduction and move on.
Okay. So do you think on the whole most people will probably be seeing more chances of a refund? Maybe if you hadn't gotten one of the tests, you probably will be.
Possibly. The other thing we want to talk about is the 529 plans.
Okay.
This is where we have the college savings. Used to be you put the money in an account. It would grow tax-free. You can take it out if you use it for education. Now you can use it for education from kindergarten on up all the way through college.
Oh, okay.
So if grandma and grandpa are putting money in a 529 plan, it's a great thing because it can use it for private school and take a tax deduction, or you don't get a tax deduction, but it grows tax-free for kindergarten all the way through college.
Okay. Well, it seems as though you've named off a number of things that are, for the most part, pretty good for you. Are there some things that you need to really be watching out for?
Well, what you want to watch out for is if you pay alimony, or if you're thinking of getting divorced,
right.
The time to do it is this year, because you still get the deduction for alimony. Starting January.
Pushing people apart.
It's a heads up.
Get yourselves out of therapy right now. Get that divorce. Save yourselves a few bucks.
We look from the tax standpoint. So if you're going to get divorced, it's the year to do it, because next year alimony will not be deductible, and it won't be taxable to you. And one more thing is that you've got, let me think for a minute, interest deduction or home equity loans. Home equity loans are no longer deductible effective immediately. So if you took out a home equity loan, you're going to have to pay. You don't get a deduction on the interest.
And a lot of people, we've been seeing the home prices going up and up, and so people probably are getting a little bit more equity in their home from what they purchased it a few years ago.
Right.
And you're looking to make a few, fixer-uppers to your house. You can take some of that money out and put it back into your house, but you're not going to get the deduction.
No, you're not going to get a deduction.
No longer,
People borrow out of their home to do all kinds of stuff with the idea it's going to be tax deductible. No longer. What you may want to consider is refinancing your entire house, because that is deductible. The interest on your home is still deductible, but the home equity portion is no longer deductible.
Of course, now that you're divorced, you're going to have to get that apartment, and that's going to be
That's the way it works. That's the way it works. So heads up.
Joe, how do people get in touch with you?
Just Google me, 2 words, Joe Burt, B-E-R-T.
Okay, good deal.
Thanks, Bob.
Good to talk to you. Thanks for coming in.
My pleasure.
Amy.
All right, note to self, Joe Burt.